Ladies and gentlemen, good day and welcome to the Kpr Mill Limited Q4 FY24 earnings conference call hosted by Batlivala and Karani Securities India Private Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. And I'll hand the conference over to Mr. Archit Joshi from Batlivala and Karani Securities India Private Limited. Thank you and over to you, sir.
Thanks, Neha. Good evening, everyone. On behalf of B&K Securities, I welcome you all to the Q4 FY24 earnings conference call of Kpr Mills Limited. We have with us today Mr. P. Nataraj, Managing Director, Mr. C. L. Murugappan, Chief Financial Officer, and Mr. P. Kandaswamy, Company Secretary. Without further ado, I'd like to hand over the floor to Mr. P. Nataraj for his initial remarks, post which we can take questions from participants. Thank you and over to you, sir.
For the financial year 2023-24. The financial year 23-24 was a challenging year for the textile industry as a whole. The fluctuation in cotton prices resulting in lower realization of yarn, reduced demand from downstream apparel companies, increase in energy cost, piling up of inventories, severe competition from competing countries, etc. were some of the contributing factors. However, embracing the challenges and opportunities, Kpr could achieve considerable revenue and profitability with the support of its integral strengths, aggressive competitiveness, ability to meet the changing market trend and the supportive garment segment. Its expansion in vortex spinning, strengthening of renewable power resources through rooftop solar power plant, and modernization of spinning division to improve quality and productivity further are expected to drive its growth level to the next stage. We are continuously monitoring the textile market conditions. Still, yarn market is under continuous margin pressure and lower demand. In general, garment orders in Tirupur market is lower compared to previous year, but Kpr has good orders on hand. The present brownfield expansion is expected to complete during the first half of the current year. We are waiting for the market to improve to plan for further expansion. We are seeing some improvement in the yarn market during the current year. Kpr, with its unique strengths, is possessed with requisite infrastructures and ability to mobilize labor to expedite its expansion plan at any time. With these opening remarks, the floor is now open for question and answer session. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Rishabh from RBSA Investment Manager. Please go ahead.
Hello.
Yes, sir.
Yeah, hi, sir. So regards to the African operations, we have had some bitter experience in the past. But recently, we have seen that a couple of entities, including an Indian company, they have acquired manufacturing setups in Kenya or Ethiopia. So how is the situation now in terms of feasibility of doing business there? Is it same or is it better, sir?
Sir, we have set up the manufacturing facility in Ethiopia, where in the particular region there is some issues. So we are not proposed to go for further business opportunities in Africa right now. We may be seeing it in later.
But in terms of doing business there, is it feasible now, or is it only company-specific problem that you're saying?
Ethiopia is not feasible because both Europe and US has withdrawn the tax benefits extended to Ethiopia.
So what about Kenya or other African countries? Are we open to doing some business there in terms of, so some of our big customers say so, or we are looking at only Indian expansion going on?
Now we are looking at Indian expansions only, not looking at overseas expansion.
Okay. So any new customer we added, sir, in this quarter?
Yeah, we have added few customers in US in a smaller way, like Big B, Triple B. It's one of the subsidiary of Pfizer and all we have added. Some of the new customers also in pipeline we expected to come.
Okay. Thank you, sir.
Thank you.
Thank you. The next question is from the line of Deepak from Sundaram Mutual Funds. Please go ahead.
So I have a couple of questions. My first question is, sir, since past couple of months there are talks about UK FTA. Now my question is, if this FTA does comes through, what could be our addressable market opportunity in terms of dollar rupee term for cotton-based basic knitwear apparel? And are we seeing increased inquiry from existing clients such as Primark or Mark and Spencer or prospective new clients in this regard?
Sir, presently the market is more or less stable. Not much of new inquiries are all coming. The existing buyers are continuously placing the order and they're taking goods. The order position is comparatively better than the previous periods. We are having an order of close to 4,000 plus kind of order, 1,000 crore plus kind of order position. If UK FDI happens, it will be added advantages for KPR because we are already in Europe in a big way. It will help us to increase the market share.
Okay. And sir, according to what could be the TAM or addressable market which you are seeing for that cotton-based basic knitwear if that comes through?
If this comes through, it's only UK, no. The FDI going to happen with the UK only. The addressable market would be UK only. We feel it may increase by another 5-10%.
Okay. And so moving to second question. So I have seen that whatever EBITDA margin you have shared in the past couple of years, if I calculate your EBITDA on per piece basis, it has jumped from 30 odd rupees to let's say 40 odd rupees, presumably in FY24. I want to understand, sir, what has caused this delta of EBITDA per piece to move from 30 to 40 rupees, and is it sustainable or will it move back to pre-COVID levels?
Sir, it is sustainable because we have increased the value addition in this segment. We already explained to you, we have introduced the full body printing, fabric printing, garment printing, and embroideries and other things in the recent past, say 2-3 years time. So slowly the value additions are increasing in the garment. Even though it's a basic garment, we are adding some value additions in that. It resulted in increased margins in the garment segment.
Okay, so then it has nothing to do with power consumption, cost reduction, or gross profit per piece increase. It has everything to do with only value addition.
Yeah, everything to do with value addition.
Okay, sir. One last question from my end. So what was our total units generated in Cogen for FY24 and how much was it used for captive consumption in million units?
Yeah, we have produced somewhere around 11 crore units, both the wind power and the solar, and entirely captively consumed.
Okay, so I'm asking specifically for Cogen.
Sorry, Cogen. Cogen we have produced somewhere around 32 crore units. Its own consumption would be somewhere around 12 crore units. For sugar production only, not for the textile production. Balance sold in the market.
Sir, 32 was full and I could not hear the captive one.
32 crore units, out of which 12 crore units consumed in-house.
Okay. Thank you very much, sir.
Thank you.
Thank you. The next question is from the line of Avnish Chandra from SMIFS. Please go ahead.
Thank you very much for taking my question, and congratulations management team on a good set of performance. Sir, my first question is related to garment. So we had 40 million piece production. So can we maintain this run rate? And my related question is the capex you announced for 30 million additional capacity. So will that come into the picture in FY25, and we will be able to maintain this run rate?
Yeah, we can maintain this run rate. We hope that the brownfield expansion is expected to complete in the first half of the year. So second half, we hope it will increase.
Okay, so after in the first half, we will have that 30 million additional capacity, and we can maintain this run rate.
Yeah.
And sir, this year we had more million of pieces than the rated capacity. So how much outsourcing we have done, or how did we manage this number?
The brownfield expansion is going on. It is like, it is not a new expansion. No, brownfield we are adding machines. Because of that, the production is little higher.
Okay. And sir, fabric number in rupees and million ton for quarter?
Yeah. For the quarter, we have produced about 22,000 tons of fabric. 2,285 tons of fabric and the value of about 66 crores.
Okay, value 56 crores. And sir, whatever we sell outside, everything is processed fabric. We don't sell anything grey fabric.
No, we sell only grey. We don't sell fabric, processed fabric.
Okay, so outside sale is grey fabric and captive is processed one.
Yeah. For our own consumption, we process.
Okay. And the last question, sir, any other capex we are planning in ethanol or sugar segment or anything on the garment different segment?
Right now, we are not planning for any expansion as it is. We will inform. A lot of expansion programs are all on discussion. We will inform you as and when it gets finalized.
Okay, sir. Thank you very much.
Thank you. The next question is from the line of Rajesh Kothari from Alpha Accurate Advisors. Please go ahead.
Good afternoon, sir. A few questions from my side. One, how do you see the overall demand environment from the garment division perspective? If you can give the country-wise, Europe, North America, Australia, in terms of the inventory, destocking, is it over? And how is the likely season currently, what you see?
We are carrying an inventory of about 1 month stock, and presently the geographical sales is Europe around 60%, US is about 20%, Australia is about 15%.
Yeah, correct. I'm not asking the sales mix. I'm saying, how do you see each market in terms of the demand outlook, for this?
Stable, sir.
And how do you?
Market is stable. So whatever expansion we are doing now in brownfield, we hope that it will be met with the demand.
I see. Means, are you seeing that basically in the first 6 months itself, you will be able to run at optimum utilization?
First 6 months will take to complete the project. We hope that in the second half of the year, we will run it at optimum.
Okay. And typically, the optimum utilization generally in the first 6 months, typically how much one should assume?
First 6 months? First 6 months, somewhere around the same whatever we have done this quarter, somewhere around 40 million garments.
40? No. I'm saying once your expansion project starts, say for example from September, am I right? For the expansion,
it will be expected to complete by September.
Correct. So from
the second half of the year, not exactly. From the second half of the year, we hope that the production will come from the entire brownfield expansion.
Correct. So my question is, during October to March, how much do you think you are likely to produce from this new capacity?
Hopefully somewhere around 45 million garments per quarter.
40 million garments per quarter.
45 million garments per quarter.
45 million garments per quarter. Okay, so basically, what we are saying is, so from 38, right now, your average is around 38, if I'm not wrong, correct? From 38, basically you expect it to go up to 45.
Yeah.
40 to 45, something like that.
Yeah.
In first half, before this starts, do you expect, 40 million and then 45 in the second half? That's how you are seeing it?
Yeah, first half is somewhere around 40 million, and the second half expected to be somewhere around 45 million.
Okay. And in terms of the, the overall, realization per garment, do you see the new capacity, is it going for more value-added segment, or you think the realization likely to product mix by and large will remain the same?
Remain the same.
Okay. Understood. And in terms of the, the raw material prices and margin, how do you see that? Are you carrying any inventory right now, from that perspective, yarn as well as fabric, as well as your key raw materials?
Sir, inventory stock you are asking for?
Yeah.
Sir, we have a cotton stock of about 3 months.
Okay.
Yarn and fabric is market driven. We are having a stock of about 10 to 15 days.
Understood. Cotton inventory you have about 3 months.
3 months, yeah.
And are you seeing any significant increase in freight cost, or is it broadly manageable?
Broadly manageable.
Okay. And in terms of the competition, how do you see the competitive environment? Are you seeing a very tough environment, or is it a by and large, how do you treat the competition right now globally?
Globally, competition is tight only. We are comparing the Asian countries like Vietnam, Bangladesh, China, and all competing very heavily. So it is same only.
I see. So the new offtake,
sorry to interrupt
when
you,
you're
sir,
planning.
I request you to come back for a follow-up question.
Okay, this is just last question. So I'm saying for the, significant improvement from second half, whether this kind of a demand is already tied up with the customer, this kind of supply of the new capacity?
No, we won't tie it up in advance. We will do it in the course of the business.
Oh, got it. Thank you, sir. I'll come back in queue.
Thank you. The next question is from the line of Aman Agarwal from Carnelian Capital. Please go ahead.
Sir, thank you for the opportunity. Just wanted to get an idea on the EBITDA margin for yarn and garments business for this quarter.
So yarn is about 12%.
Okay.
Garment is about 24%.
So if you can explain the decline in margins, like yarn, if I'm not wrong, was 15% in last quarter, right? And garments at 27%.
Yeah.
Reason for the decline, sir?
It is being a season, there is a little fluctuation in the cotton prices.
Okay. And so, like the 3 months of cotton stock we are carrying, like what could be the cost of that, like which we are carrying on balance sheet date?
We cannot disclose the prices on whatever is the cost of material and all. It's only the approximate number only we can tell.
Sir, any reason for the decline in garment margins? Like, is it also due to cotton prices, or was there any other factor?
No, this is basically the inventory cost.
Okay, got it. Sir, we had announced a Capex for processing facility, which we are expecting to finish in 1.5 years. So, how is that progressing in terms of getting government approvals, and like when can we have that processing facility available, which will be obviously for our future growth, not for the current, but like for the future growth?
Yeah, it is in progress. We hope that it will be completed as per the plan.
And so by when do we expect that to complete?
I expect it to be first half of 2025-26.
It's 126. Got it. Sir, are we seeing any impact due to the Red Sea issue, or like that is behind us, like if you can talk about it?
Yeah?
Are we seeing any impact of the Red Sea issue, like in terms of availability of containers for exports? So yeah, just wanted to get an idea on that.
No, not much of an impact, sir.
Sorry, sir?
Not much of an impact, and the business is as usual.
Got it. Thank you for answering my question, sir.
Thank you.
Thank you. The next question is from the line of Vikas Jain from Equirus Capital. Please go ahead.
Yes. Hi, sir. Thank you, sir, for the opportunity. Sir, firstly, if you could comment the 40 million pieces of garments that we did, how much was the share of essentials or full-length garments?
Sir, it's more or less completely essential, sir. We are into that segment only.
So ideally, is there any dramatic change in the product mix between on a year-on-year or on a sequential basis between last quarter and this quarter?
No, sir. More or less the same.
More or less the same. Okay. And sir, in terms of garment margins, of course, in lower scenario, we did see 26-27% margins as well. But on a steady state basis, 24% is something that we should.
24% is 22 to 24% is what is we can take it as a steady margin.
Okay. And sir, if you could give a difference between the revenue of sugar and ethanol and the margins there as well.
Yeah, the sugar division as a whole, the margin is about 28%. Sugar revenue. INR 227 crores.
Sorry, sir, could you repeat?
Sugar revenue. 73 crores for the quarter.
Okay.
Ethanol is about 150 crores.
150 crores. Okay. And the margins for both the segments individually?
Individually, we do not have. The combined margin is about 28%.
All right, sir. And sir, just one small request. If you could share these operational details along with the presentation, I believe that would be much better for the investor side. Just a small request from my side.
Yeah. Actually, it will come in the balance sheet detailing. Maybe in 10-15 days time, we will be publishing it. Anyway, we will discuss with our team and let you know.
Yeah. Thank you so much, sir.
Thank you.
Thank you. The next question is from the line of Yash from iThought PMS. Please go ahead.
Yeah. Hi, team, and thank you for the opportunity. If you could firstly repeat the CapEx plan, my line got disconnected. And secondly, I believe a few of your peers are looking at a little slightly more aggressive CapEx, in terms of government expansion. So wanted to understand what is our strategy over the next 2 to 3 years, probably of our existing capacity, what sort of capacity are we planning to put up? That's the first question.
Sir, we propose to invest in the textile segment only right now, and we are waiting for the market to improve. Basically, in the yarn segment, still having a margin pressure, and if yarn segment having a margin pressure means the garment business has to improve, then only the margin will improve. So the garment industry, especially the knitwear industry, is still having order issues. So the market situation is not very comfortable. So we hope that the things will improve in the coming half of the year. Then we will decide on the further capex in the textile business. By the time we are doing the brownfield expansion, it will continue. It will be completed sometime in the first half of this year, and it will start giving revenue in the second half of the year. Other expansions we have not decided yet.
Okay, sir. So brownfield is 30 million, right? If I'm not
30 million, yeah, you are right.
Okay, got it. Sure, sir. If I have any other questions, I'll come back.
Thank you. Thank you, sir.
Thank you. The next question is from the line of Ahmed Madha from Unifi Capital. Please go ahead.
Yeah, thank you for the opportunity. So just I wanted to understand the garment number a little better for the Q4. If I look at the Q4 volume data, it is roughly 49 million pieces. So how we have been able to do this much volume considering our capacity, I think is annual near 150 million. So I'm not able to understand how the volume number is so high. Did we have some inventory or what?
The sales volume is little higher because we have some of the inventories are got liquidated during this quarter, and the actual production volume is about 40 million, and sales volume is about 49 million.
Okay. And we should be able to sustain 40 million in the next year first half.
The next step, yeah, you're right.
Okay. And regarding the realization decline, about 20% realization decline compared to Q4, so is it just the function of cotton price or is it the function of any value mix change?
More of a cotton price.
Okay. And on the sugar business, I think we had couple of weak quarters for Q3 and Q4. So I think, is it fair to assume that in the next couple of quarters for this sugar season 2023-2024 it will be weak, and then from next season onwards it will pick up? How should we think about the sugar business?
Yeah. So it is the off season for sugar. For the first half of the year will be little less, and the second half being season, it will be little higher. Overall, we have achieved somewhere around 28% for the year. We hope that the things will be good for the coming year also.
But sir, I'm not able to understand the sugar volume piece. Why are the volumes down for the year? I understand ethanol you cannot utilize full capacity, but volume should be good. So what am I missing?
Yeah. So you're right, but what happened is sugar, when we produce more sugar, we have to wait for the government release order for selling. That's why the volume is little less.
So how much inventory we are sitting on as of now?
We have an inventory of close to about 150,000 tons.
150,000. So you expect that based on your inventory quota as of Q4 end, you will get some volume quota for the next couple of quarters.
Next 2 quarters we will get the release orders.
Okay. Thank you. That's all, sir.
Thank you. The next question is from the line of Mulesh Savla from Shah and Savla LLP. Please go ahead.
Thanks for taking my question. Good evening, sir.
Good evening.
Can you hear me?
Yeah. Well, sir.
Sir, can you throw a little more light on the FASO activity, FASO business, because how it is doing and what steps are we taking to increase the visibility and all those things?
Sir, in the marketing side, we are taking the next level of advertisement and the sales promotion activities in South India. It is going on. We hope that it will be increasing the volume and value also. The theater and advertisements in the newspapers and the handouts and the in-stores advertisements, those things are all going on. We hope that it will give a good result in the coming period.
So by and large, are we now pan-India or still we have restricted our marketing efforts towards South?
Yeah, South India only, sir.
South India. Okay. And can you share the top line and EBITDA margin on that particular division?
It's not meaningful compared to the volume whatever we have, but it is close to the top line. I can tell you it is somewhere around 25 crores now. We hope
for the quarter or for the year?
For the year.
For the year. Oh, okay. Got it. So I think we need to push this up.
Yeah, you are right.
Correct. All right, sir. That's all from my side. Wish you all the very best.
Thank you, sir.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants, please limit your question to 2 per participant. Thank you. The next question is from the line of Biplab Debbarma from Antique Stock Broking. Please go ahead.
Good afternoon, sir.
Good afternoon.
My first question is on the garment expansion. So has the situation improved in Europe or Germany for you to consider greenfield expansion in garment, or the situation is still the same as it was in, say, 5-6 months?
The situation still grim, no? Both Europe and especially Germany and all is facing some problems, especially higher inflations, lower demand.